Welcome to the TAC Index AI podcast, October 23, 2025, where we blend TAC IP data, reports, and charts with the latest news in all things logistics with a focus on air cargo. So today we're diving into latest TAC Index data, the October 21st update, and things are looking, well, interesting. Global air freight rates are definitely on the rise.
They are.
But the question is this really the start of peak season demand? Or is something else, maybe disruption, forcing cargo into the air?
Yeah, that's the core question. If you look globally, the Baltic Air Freight Index, the BA0, it gained a pretty solid 3% week over week up to October 20th.
3% globally.
Which means it's only about 3% lower than this time last year. So that gap has really narrowed.
Right. But like you hinted, it's not an even picture across the board, is it? It seems very fragmented.
Exactly. Incredibly fragmented. The gains aren't uniform at all. You look at Asia outbound, rates out of China were, well, way up week over week.
Like Shanghai.
Shanghai, yeah. The BAI-80 index there jumped a really chunky 6.9% just in 1 week.
Wow, okay. And Europe.
Europe's climbing too, especially those transatlantic routes. They're up again week over week and significantly higher than last year. London Heathrow, the BAI-40, that's up 4.5% week over week.
1.5. Still strong.
And it's comfortably ahead year over year, like plus 15.9%. Big difference from last year.
Okay, so Asia's up, Europe's up, which sets up the contradiction you mentioned earlier, the U.S. outbound picture.
Precisely. While London is soaring, the U.S. is going the other way. Chicago outbound, the BAI-50, it actually shed almost 5% week over week.
Dropped 5%.
Yeah, which leaves it down about 16% compared to 12 months ago. So a completely different story playing out in the U.S. export market.
So that really begs the question, doesn't it? If peak season is kicking in, why are major U.S. lanes falling? What's actually pushing up these rates so much in Asia and Europe?
Well, this is where we have to look beyond just air cargo seasonality. Our sources are strongly suggesting that a big part of these gains, maybe the main part, is boosted by shippers switching from ocean to air.
Ah, the modal switch.
Exactly. It seems triggered by recent disruption in ocean shipping, specifically on the Trans-Pacific routes.
Okay, Transpac disruption.
Yeah.
What caused that?
It seems to follow China retaliating against those new U.S. docking charges. That threw a wrench into the works for ocean freight timings.
Right. So political actions create ocean bottlenecks, and suddenly shippers are scrambling for air freight capacity because their sea containers are delayed or too expensive.
That's what it looks like. If your cargo misses its delivery window because of port issues, you might have to fly replacements in fast.
Yeah.
And that costs.
And that single issue connects to the broader volatility, I guess.
It does. It's part of this, wider pattern of geopolitical pressure messing with trade flows. Look at Germany, for instance. German exports to the U.S. fell over 7%, apparently linked to U.S. tariffs. But at the same time, Chinese imports into Germany rose over 8%.
Raising concerns there.
Yeah, concerns about potential dumping prices from China and Germany maybe becoming overly dependent on those imports. It's all interconnected.
And the potential for more disruption is there too, isn't it? I saw something about the U.S. considering even bigger moves against China.
That's right. There's talk of potentially curbing exports to China of any goods made with U.S. software.
Wow. That would be huge.
Huge. Think about the ripple effects through global tech manufacturing. It would touch almost everything if that happened. Massive potential disruption.
Okay, so we have volatility potentially driving this forced demand for air. What about the supply side? Costs, capacity? You mentioned fuel earlier.
Yeah, fuel costs are definitely a factor.
Yeah.
Oil prices have been supported lately. Brent crude was up 1.7%, WTI up 1.8%.
Why the support?
Partially because the U.S. announced plans to start refilling the Strategic Petroleum Reserve, aiming for about 3 million barrels initially. That puts upward pressure on crude, which means upward pressure on jet fuel.
Right. Affects the whole logistics chain and capacity. Are there any bottlenecks there?
Well, internally in the U.S., definitely. The FAA has been reporting significant air traffic control staffing shortages. They're short something like 3,500 controllers from their target levels.
3,500? That's a lot.
It is, and it causes delays. Earlier this month, the FAA said over 53% of flight delays were actually due to these staffing issues.
And the government shutdown isn't helping, I imagine.
No, definitely not. You've got 13,000 controllers who miss paychecks. That adds strain to an already strained system. So even if global demand spikes, internal U.S. capacity faces real friction.
Okay, so pulling it all together, what we're seeing is maybe a fragile spike in air cargo rates.
I think fragile is a good word. It seems driven less by strong organic demand and more by volatile trade policies forcing that modal shift from ocean.
And it's happening against a backdrop of rising fuel costs and these specific operational constraints like the ATC shortages in the US.
Exactly. It's a complex mix of factors.
So that leaves us with a big question, doesn't it? For you, the listener, managing supply chains. If ocean capacity keeps getting tangled up in political games and tariff disputes, how high can air freight rates actually go?
Right. At what point does the cost of constantly reacting, of using air freight as damage control, become just too high?
When does it force a fundamental rethink of global sourcing and maybe your entire supply chain strategy? Something to definitely keep an eye on.